Do 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 do. All right. Revisiting Aurora Cannabis Inc. ACB. Did a podcast late August on this one. Where were we? Late August to June, July. Pretty much at this candle. And right now, 2 months later, or 1 month, and now we're starting October, and things have changed pretty much, guys. Zoom. Right here, monthly defined breakout line, first test of it, first break of it, closed above it. I like it when there's more tests, multiple tests of a breakout line. Trust it more. Here's the implied measure move on the monthly candle chart before we head down to the weekly and do some stage analysis. And right now we have a move all the way close to $17. Confirmed last month, that's the move with that close above 1183, and right now we should be on target to 1680, 1690, close to 17. And that's how you like it. Nice base. Breakout. Pull back towards the 12-month moving average. Still in the uptrend. A little close below here. Not super duper. Got back in the next month. And continuing up at stage 2, guys. And we're not that far away from the 12-month moving average. You see here, when it gets really far, then you get some seller action here, pressuring it down. And eventually bring it all the way back down to this trend. So this is a nice continuation on the monthly candle, the very super duper important monthly candles, removing the noise, the higher prevailing trend, like Stan says. Make sure it's in your favor before you head down to the weekly, guys. What do we have here? Look at that. Here was already, I think, right here. This August, yeah. The 20th, and I think right here. This was about the week where I did my podcast, and the other stocks were exploding. I forget which one, maybe APH, Cron, and Aurora was lagging behind. But at this moment, the other stocks were far off the 30-week moving average, and it was pretty cool to keep an eye out on the next leaders, the followers, giving you a better risk-to-reward ratio. And after that, well, just exploded. Bang, bang. And here we are. Let me see. Where's my month? Okay, here's the breakout candle. Close above, weekly defined. Breakout line at the 10 area. Breakout. See, embryonic breakout here. You don't play it yet because the 3-week average is still going down. You're below the Ichimoku cloud on these two candles. Contracting volume on the pullback. Exploding volume. This is just classic stage 2 stand, or stage 2, stage 3, failed stage 4, and stage 3 continuation to the top. Next resistance level, maybe at the 14 area, might get some resistance right like that. Maybe a pullback here to this breakout line, to the weekly defined breakout line around the 1150 area, and maybe a continuation. As long as on the weekly you get those pullbacks on a contracting volume, it's healthy. It gives you just additional confidence that the pullback on close to the breakout line is a good risk to reward. 30-week average, what could it look like at this stage? Something like that, as long as the price action is above. So you see, the price action goes up, guys. It can't go to the moon right away. It's healthy for the stock when it's too far out, 30-week average, to come back down close to it, go up. As long as you see higher lows, higher lows, you're in uptrend. And the day that you have a lower low, let's say it goes back down here, that means the uptrend is really starting to wind down, almost ended, and you should be triggered out your sell stop. That's why Stan, he puts his sell stops below those pullbacks going back up, because he's probably, with his observations, he's noticed that trends tend to end when you're not making new higher lows, and when you have lower lows, that's just that downwards pressure you don't want to be in, guys. So Aurora is looking pretty sweet, and now you see what looked like it's all psychology, the chart, the way you look at it. Because before I squished it down, and back here in the days, oh look man, that's exponential, it's too high. But for that moment, maybe, but as time moves on, what seemed big, what seemed high, becomes small. So that's why you don't let yourself influence by the size of the chart. Don't be scared of new highs. New highs are good. That means you're going upwards. Don't say it's too expensive. What looks expensive one day is just you're gonna say, that was not expensive. So just listen to the chart. If there's a single breakout on the heavy volume above a horizontal breakout line, and all the other criteria that you might be looking at, if the weight of evidence telling you it's a buy, you go in. And worst case, guys, you have your risk and money management, you minimize your losses, and then you just move on to the next trade. So it's a question of trying charts, and eventually you get that chart which is always perfect stand, which goes up, never threatens to pull back before previous low, and you get to ride it for years and years. And all the other ones, when you weren't sure, or you just took a shot at it and they didn't pan out because the CEO was a crook, because of whatever, and it's okay. You take you 1% loss of your NAV, and that's it. What you want is these monster trades. You want to ride this from 10 to wherever it's going to stop. These are the ones that you want to be in, you want to look for, guys. So outperforming the SPX, let's see compared to its peers, guys. HMMJ, yeah, the ETF index, look at that, outperforming its peers, going over the halfway mark. I love that. Over the 0 mark, you have the momentum from the bottom and just pushing through, outperforming its peers. Very good. And I discovered also there's another index, an ETF covering which hosts a multitude of cannabis related stocks, MJ. And right, that one you're not as outperforming the oh, maybe it's just an illusion. Yeah, I see, starting through the halfway mark. When we had this crazy volume, when the 30-week average starting to go back upwards, it's all coincides, guys. Most of the charts, don't even look at the top, just look at the volume. I could actually remove all of that, and you look at just by the volume. After that, you look up, look, went through an important breakout line, the 30-week average going upwards. So just the volume is just like, you could reverse engineer what's happening in the chart just by looking at the volume most of the time. And that's pretty much it, man, for cannabis. Aurora had a nice consolidation pattern. If you look on the daily to get some, just to see what's up. If you don't want to wait, then you go up and down. See the volatility reducing. Every time it went up, bottom. Here maybe pull back 10%, even maybe a little bit more, 20%. Then it pulled back, corrected maybe 10%, up, down, smaller and smaller percent. And what's really nice is the contracting volume all over those days, guys. And after that, it really went down, and you don't need much after that for it to bust open. All that supply, the sellers are starting not to be there anymore, and the stock is just waiting for a direction, either massive sell or massive up. But since you're already in an uptrend, since the 30-week average is still already going upwards, it's most likely that that trend is going to bring you up, guys. And here we are, guys. All right, cool, looking good. All right, guys, see ya. Don't forget to subscribe and like. Thank you.